Hey everybody, on the screen it's looking a little messy, but it is finally time to go over the Docusign trades that I'm constantly talking about, especially in a couple of the shorts in the last couple of months. This year I would easily categorize this as my worst trade, especially this one all the way back here, but I'll get back to that. And this trade is still currently in drawdown, but I'm going to show you guys how I've been managing it to get my break-even price lowered and what I'm looking for in the future. Originally, I entered Docusign on their earnings release right around here. This day is Thursday, June 5th, so just about 6 months ago. At the time market closed, we were looking at a share price of $92.90. I know that this is a trade at 85. It is a short put, and the reason I did that is because I like the structure leading up right here. Looking back, you see this bullish trend breaks down right around here. You see this leg down, leg up, leg down. I'd look for highs to break right around here, which we then saw here. We then see a slight range right here, then a break above it, and then further rally right there. A small leg down before continuing back up. Again, this high broke this high, and then this high broke that one. The reason I targeted this area is because it was the most recent structural low. It was a range and a previous high as well. Now looking back, I would probably not enter any more short puts, especially on the earnings trades, or at least I would not start a position by doing that. So I've not traded Docusign previously before this, and I thought it was a fairly safe trade to take just to make some extra side money. The good news is that this was only a $8,500 commitment, plus the premium received here automatically lowers my break-even price right off the bat. After Docusign released their earnings on that day, we saw a 19% drop. So this was almost double the expected move and double the move that I had actually planned for. If you guys are new to trading options and especially shorting them, I wouldn't stick to doing it around earnings. As you guys can see, it can be very risky if you don't have a whole lot of capital. This is the company I've traded the most, and it's not because I'm some super fan. It's just because I've been stuck in this trade and in drawdown, and I've been lowering my break-even price ever since. Now, this is something I won't be doing in the future, especially on companies that I'm not that big of a fan of. I have this $8,500 commitment. You guys can see right there, I wrote assigned. Then we can jump over here. All of these red lines right here are going to be short calls where I'm looking to exit. Any green lines before market price are short puts where I'd be willing to pick up even more shares. You guys can see here I set up a short strangle. I was eyeing again an exit at 85. That was my original cost. And then down here I was willing to take on more shares at 70. Both of those expired. I just collected the premium. Then I moved on to another short call. Right here, again, targeting 85 at my original cost. That also expired, and I just collected the premium as income, and price moved further down. So this increases my drawdown, but I was able to make some money in this area. Also, a little side note, I was inactive from trading right around this time, all the way to around the 1st of July, right around here. I was then inactive again from August 1st to around mid-August, and then inactive a third time right around October 1st to October 16th or 17th. I was just out of town for all three of those time periods. Jumping back here, you guys can then see I drew this blue square. This is just indicating where I'm trying to buy into next. So I was looking for some type of structure in here where I would pick up another short put and then hopefully be assigned, and then I could cut my original share price down. Jumping back up here, I have two more covered calls, again, also right around earnings. So I had this one right here that expired after earnings release, and it was not assigned, so I was unable to exit. Anyways, even if market price did close above here, it was an early close, so I just took whatever I could. Then jumping to the next short call, I was looking for an exit around 81, also an early close. That could have been a small loss or maybe just a very small win because I didn't hold it for too long after the earnings release. Down here, I was also willing to pick up more shares at 66 a share. This is a short put. I have no text above it, but I'll just assume that it expired. Then jumping back up here, we finally see price retrace all the way back to this original trade over $85 a share. I did an 86 short call, so this would have been my exit. But then you guys see this massive drop down right around here, over 12%. That is right around when ChatGPT and maybe even a couple of other AI platforms talked about how they started to integrate contract signing. So that's why we see this huge drop that would then render Docusign kind of redundant, or it would just make it highly competitive. If you guys don't know much about Docusign, pretty much their fundamentals are based on high margins and major contract subscriptions with major companies like Microsoft. After that drop, I decided to draw another blue square, and right here I'm looking where can I target to enter more short puts and pick up more shares, because obviously price doesn't want to hang up too high up here, so I need to start averaging down by picking up more shares. I then rolled in two more short calls right here just to make some income. Right here, these are long puts. These are protecting my position just in case price decided to continue further down. So we see a leg up, a fast, sharp drop down, then a range. So I was worried that this range would then lead into another sharp drop. That's why I did 2 long puts right here. These short puts, you can see 1, 2, and 3 early closes. So I was never assigned more shares. I probably just collected premium or again took a small loss. Then leading up to earnings here, you can see I did take another short put trade. I was willing to pick up shares at 64. Market price closed around 65, 67. So I was unable to pick up those shares. I also had this long put at 60. Again, this is a protective put to cover my current position. And then up here, I currently have a short call at 80. I'm starting to lower what I'm looking for. I can collect more premium. I have a significantly lower break-even price than this 85 back here. I believe it's actually somewhere around 75. Probably can't target too much profit in this trade, if any at all. I would just love to exit it in general. On top of that short call exit, I also have a short put at 64. In the event that this gets assigned, I'll probably be looking at some type of average or break even right around this low 70s area. And if I expand my previous area right here, price is currently resting where I wanted to pick up more shares. It would be even better if I can get them at 64, but for now, I'll probably hold these 2 contracts until expiration and just keep on collecting premium. Overall, this strategy is part of something called the wheel strategy. You pretty much do short puts on companies that you're willing to own. If the contract expires, you collect premium as income. If the contract is assigned to you, that's okay because it's a company you wanted to own to begin with. And then in the future, you can either make profit on your equity and just close the trade, or you can do a short call, collect premium and close the trade to break even. Or the third option is do a short call at a higher price than your short put, make money on the short put, on the short call, and you get money on your equity. So you would have income coming from 3 areas. Overall, what should you guys take away from this? 1, don't do short options around earnings. Let me rephrase that. If you're a beginner, don't do short options around earnings as it can become very costly. If this is a strategy you guys want me to dive further into, let me know and I can make a video about the wheel strategy. And make sure that if you are doing short puts on any companies, you want to own them and you are confident in them and you have some type of indicator or research that is backing the upwards momentum. That's going to wrap up this video. I hope it can help you guys in the future with your options trading, your earnings trading, and how you guys can manage trades and lower down your break-even prices, just in case you ever fall into this hole like I did. Now, with that being said, this is the worst trade of the year for me. This is where most of my losses come from, but this is not what most of my trading looks like. If I pulled up my wheel strategy Excel sheet, around there for the year, I'm looking at 125 wins and only 15 losses. Those losses include early closes and protective puts, so that it's a little skewed, but I just want to throw everything in there and be a little bit conservative with the accuracy. That comes around to an 89% win rate. Anyways, that's going to wrap up this video. Make sure you guys check out my earnings trades for the rest of the week and my performances coming on the weekend. Let me know what you guys want me to cover next. Thank you guys for watching, and I hope you enjoyed.